Kenya Central Bank is being accused of managing the shilling's exchange rate and leaving it in a position where it's overvalued by up to 30%. Moreover, that's expected to run the risk of making the country's exports a lot more expensive. According to Amana Capital's report, Kenya's economic puzzle, the consumer price index essentially points to a 50% fall in purchasing power as far as the Kenya shilling is concerned. That report studies a range of factors, including the country's debt levels, its balance of trade, employment, fiscal policy, currencies and interest rates as well. In 2009, the Kenyan shilling was trading at about 72 to the dollar. Now, though, it's closer to 101, effectively representing a 20%-ish devaluation. Last year, the International Monetary Fund argued that the shilling may be overvalued by up to 17.5% in its assessment of the Kenyan economy. All right, then, so let's dig into that report. Reginald Kututu is the Chief Investment Officer at Amana Capital. Author of this particular report is with me in studio right now. Thank you for your time.
Thank you.
Okay, so the relative value of the shilling. This has been a very hotly debated topic in investment circles and banking circles for quite a while. Why did you decide to dive into it?
Because we believe that we need to remove the uncertainty on the shilling. What is its true value? And in the mix of everything, if you look at the other elements of the economy, we believe the shilling is where the spark that will take the Kenyan economy into a recession will come from. So we decided to do a bit of analysis on it, and it seemed to be going well for a while, where the economic indicators and matrices that go into valuing a currency and the movement of the shilling were all in tandem. Then all of a sudden the shilling stagnates at 100. Yet those matrices continue to point southwards.
Yeah, because it hit 100, 106 around 2015, and then thereafter it's been essentially around 100.
100 has not
thereabouts.
moved, yeah, but CPI has been moving, balance of trade has been widening, current account has also been widening, and money supply has been growing. So after doing analysis, we realized there's actually a bit of overvaluation on the Kenya shilling itself, and the central bank has not been able to give an explanation to the market how or what is supporting the shilling at 100.
Right, we've tried, and I'm speaking at the CGTN desk here, we've tried to get analysts to talk about the Kenyan shilling. It's been extraordinarily difficult. It almost seems like the sort of industry gag order that's in place about talking about the shilling. But in your case, you're talking about it. Has the central bank responded?
Nope. Well, if they respond, that would be good. We're actually waiting to hear what their response is. Because the figures that we've used in the analysis are figures from their own research department, from Central Bank and Kenya National Bureau of Statistics. Yes.
Right. So the IMF made roughly the same argument last year in October, and it, of course, triggered this furious response from the central bank. They said no, they disagree with that analysis. So the IMF, using their methodology, arrived at the conclusion that the shilling is about 17.5% overvalued. So walk us through a comparative analysis here, their analysis versus yours.
Okay. So what we have done, basically a currency's value is a direct factor of demand and supply of that currency. So we looked at the factors that affect demand and supply. So we looked at the CPI, the inflation, and basically using a purchasing power parity. So if you look at CPI in 2009, even if you use January or even use May, and CPI now, it was around 90 in the 90s, and in January it was 97. In May 2009 it was around 101. Now it's at 200. So what 100 shillings could buy in 2009 May, you need 198 shillings to buy the same basket of goods today. That means the currency has actually lost 98% of its purchasing power. To put it in other simpler terms, what 100 shillings was valued at in terms of what it could buy in May 2009 is only worth 2 shillings today, because you need another extra 98 shillings on top to buy the same basket of goods. So if you look at the devaluation of the purchasing power of the currency in the local market, then you look at the exchange rate. You find the exchange rate is only, it was moved from 72 to 80 is 100, which is close to 20 something, 28, 26% devaluation, compared to a more than 50% loss of purchasing power.
And at that point in time, money supply has just been going through the roof as well.
Yes. So if you now look at money supply has grown by more than 220% between 2013 and now. Ideally, when money supply is going, that means there's more supply of the Kenya shilling, meaning that there's less demand for it. So if there's more supply of a currency, again, also the value of the currency is also supposed to come down.
Right. So one other thing that I think I found particularly interesting was how you referred to diaspora remittances, because the argument you often get from the central bank is that if you look at sources of support for the currency, they always flag diaspora remittances as one of the reasons why the currency is where it's at the moment. But you essentially said that those figures are questionable. Why?
Yeah, we'll question. If you notice, most of the figures of the government that have gone up, even when they're reporting GDP, they are figures which you call grey figures. They are not easily verifiable. When they talk about employment, we've created 800,000 jobs, 700,000 of those jobs have been created in the informal sector because we cannot verify the jobs that have been created in the informal sector. When they say inflows into the country, it's very easy to say diaspora remittances have gone up because none of us have the mechanisms to actually check whether that has gone up. I find the figures questionable.
But I mean, surely they'll be able to say, look, we've seen X amount of cash coming in through the banking system, and the banks report those returns to us.
But most of that money doesn't come through the banking system. It most comes through Western Union. Now they claim that because M-Pesa is also doing international, the money is, that's why Kenyans are sending more money back home. And I'm thinking, if someone was using Western Union, you won't send more because there's now M-Pesa. You must just probably reduce what he sends with Western Union and moves it to M-Pesa. If you look at the point where diaspora remittances actually shot up, it was around the Supreme Court ruling in 2017. Which is already suspicious in nature. If you look around August, September 2017, all of a sudden the month-on-month diaspora remittances shot up and they remained up at that level. But even with the diaspora remittances, if you look at the, because now we're looking at balance of payment to support the shilling. We have exports of 500 billion roughly in 2018. Add the 240 billion they claim came in diaspora remittances, you are at 700 and something billion. Add in all the other income that you get, you're not even at a trillion.
Because even our fixed income doesn't get that much cash.
Exactly.
And investors have been cashing out of the NSE 20 as well, progressively selling down their stocks. Yes. That's money going out.
That's money going out. We have imports of close to 2.5 trillion, and we have a foreign debt of close to 2.5 trillion. That's already 5 trillion in terms of foreign outflows in terms of demand for the dollar. So even if you look at the balance of payment position, there is still more demand for the dollar than for the shilling. The current account that they always say that is narrowing, and that's why the shilling has been able to remain stable. It is a bit foolhardy to keep on using GDP as a denominator on the ratios that we use to analyze the economy, because the GDP figure is inflated. So when you say current account deficit has narrowed, they're looking at current account deficit to GDP. But if you look at import to export, the gap between import and exports has widened by close to 24% between 2013 and now. Right. So there's a general more demand for the dollar, even on the balance of payment side. The primary account, which they use to measure diaspora remittances, if you look at the credit and the debit side, the debit side is double the credit side, meaning that we pay out more in interest, dividends, and whatever than what we get in.
To their credit, and we're going to try and play devil's advocate here, but we've got $52 billion in debt as we speak at this point. Well, it's probably higher than that because we've got Eurobond 3 coming along, and we understand that's a 12-year note and a 31-year note that's being pitched to the market. All else being equal, considering the fact that debt service now sucks up something in the order of about 20% or more of revenue, to the extent that the Kenyan Central Bank might be, they've denied, to the extent that the Kenyan Central Bank might be managing the Kenyan exchange rate to the dollar, isn't it a pragmatic move? Just to keep a lid on debt service costs.
Yeah, they actually don't have a choice. They have to keep it around that range. If you look actually at debt service to export revenue, for every 100 shillings we earn in export, 70 shilling goes to pay debt. If the Kenyan shilling moves from 100 to even 105, the burden of debt service will skyrocket, and literally we'll find ourselves in a position where we'll actually have to default or have to restructure. So they have to keep the shilling there, unfortunately, for the sake both of the foreign debt that they have, and they might have to keep it there for quite a while. Though our thought is if other measures are put in place, especially increasing interest rates to attract in more foreign currency, pushing more money to the agricultural sector to increase the value of exports so that you earn more foreign currency, you can be able to, in a controllable way, let the shilling go to where it is supposed to be.
So essentially give it a gradual soft landing.
Yeah, gradual soft landing. And I would advise that they do that themselves, because at some point market forces will actually move the shilling where it will be, and they will not be in control.
All right, we'll leave it there for the time being. Reginald, thank you very much.
You're welcome.
Appreciate your time.